Crypto markets are an absolute bloodbath right now, guys. Bitcoin slammed lower. Altcoins got absolutely gutted. The move everyone was afraid of finally ripped through the markets. Everyone's wondering, guys, what comes next? But here's the thing. Every cycle has moments like these, the kind of violent flushes that shake out the weak hands and makes the whole market feel broken. And every time, it sets a stage the biggest opportunities of the cycle. So right now, guys, people are panicking. Don't be a panicking. The charts look ugly. Sentiment is in free fall, but I want you to see what comes after this kind of crash, because history shows these breakdowns are not the end. They're often the spark. So stay with me, guys, because later in this video, I'll show you exactly why this bloodbath could be the perfect setup and exactly what caused it. So maybe you can feel better if you're a fundamental long-term person like myself. So guys, if you appreciate these kind of videos where we break things down, give you the inside information of what's going on, why these things happen, do me a favor, destroy that like button. If you're new, subscribe to the channel already. And guys, let's get into it. See, when the markets get frothy, the signals, they're usually the same. They're just hidden in plain sight. For almost a week, Bitcoin's open interest has been lower than the total open interest across altcoins. That's unusual, and we talked about it on Friday. It tells you speculative leverage has migrated into the riskiest part of the market. That kind of shift often lines up with local tops. Again, we covered this on Friday. And you guys, this is what excess looks like when leverage has migrated away from the safest part of the market, like Bitcoin, into the riskiest, the altcoins. And that always sets the stage for fireworks. And we usually have, in these kind of scenarios, you see it all the time if you look on crypto Twitter, about this one last giant flush before the big run up. It doesn't mean that tomorrow or the next day or even this week, things are gonna come up strong. We probably could go sideways for a little while. Just, what I'm doing is just chilling and seeing how this consolidates, right? We're gonna get more into some kind of price targets where Bitcoin could go a little bit later in the show, so stay tuned here. But if you zoom out, the bigger picture is liquidity. Crypto's total market cap is still over $4 trillion, but volumes have collapsed just down to 166 billion, down from almost 400 billion at the highs earlier this year. Meanwhile, open interest remained at near record highs. That amount of leverage in the system with such low volume means the tiniest shifts in conviction lead to massive moves. Bitcoin's implied volatility has sunk to 30.9%. Historic lows, and we've seen this, right? Bitcoin has been pretty much sideways all year long. The last time we saw numbers like this were in the 2023 so-called stablecoin summer, when Bitcoin sat in a coma. Do something, Bitcoin. Just poke it between $26,000 and $29,000 for months and months and months. And this was a setup coming into today. The quiet before something breaks. The liquidity has drained out. The floor is thin, and the whole market was pretending that the calm is normal. Guys, it's not. And when that calm finally snapped, this is exactly what it looked like. We just saw the biggest flush of the cycle. Over $1 billion in Bitcoin longs were liquidated in just 20 minutes after a sudden price drop. That's the largest long wipeout since December 2024. With all that leverage we just mentioned, it only took one sharp move to trigger a chain reaction. Interestingly though, it wasn't even Bitcoin that got hit the hardest. Can you guys guess what it was? It was Ethereum. And Ethereum actually led with over $500 million in long liquidations, more than Bitcoin. You got analysts like Michael Vandepop who are pointing out that this dump lines up with resistance on Bitcoin, but he sees it as setting up a major buy the dip opportunity before alt season kicks off. And history backs that view. September dumps are normal, but Q4 has consistently delivered the big runs. ILO highlights how this lines up eerily close with previous cycles. Nasty selling in September, followed by monster rallies into the year end. So if Bitcoin holds above $109,000 into the monthly close, that sets up with an extremely bullish Q4, with prior cycles showing multiple green months in a row from here. We're getting close, guys. This Q4, we all think is going to be pretty big. Let me know in the comments below if you feel like it's going to be big as well, or if you think that we are done for this cycle. And even if September closes red, post-halving years like 2013, 2017, 2021, they all ripped higher in October, and we are in a post-halving year. And technically, the flush may already have marked a bottom. We've got $1.7 billion in longs liquidated in the past 24 hours. That's insane. RSI showing oversold conditions and price holding above the 200-day SMA. The worst case, a double bottom before the next leg up. The best case, this was the reset before full send. All signs are pointing to a leverage reset, not a trend reversal. This is very important, guys. Bitcoin structure is still bullish, and unless we break down from key levels, this dump sets the stage for a massive Q4 rally. Last week, as you guys know, the Fed cut rates by 25 basis points, bringing the federal funds rate to 4 to 4.25%. This was the first cut since last December. But instead of sparking a breakout like we've seen in past cycles, Bitcoin has drifted lower since the cut. Futures markets are still pricing in 3 more cuts this year. The Fed's dot plot is split wide open. Some members want multiple cuts, others see none. One even implied higher rates by year end. Growth forecasts were upgraded. Unemployment revised lower, yet the Fed still signaled more cuts. That is the paradox, guys. Meanwhile, bond markets are setting their own signals. The 10-year yield actually went up after the cut, climbing back above 4.14%. This shows that financial conditions are tightening even as the Fed tries to ease. And if this wasn't enough, new Fed Governor Stephen Miran dropped a bombshell. He says the Fed has a third mandate to pursue: moderate long-term interest rates. That's code, guys, for yield curve control. Yield curve control means the Fed caps long-term rates. And here's how it works. If traders push yields higher, the Fed buys unlimited bonds to force them back down. That's direct control for borrowing costs, and it's rocket fuel for Bitcoin. Pair that with the White House floating public offerings for Fannie Mae and Freddie Mac, and it looks like they're preparing to directly manage mortgage and business borrowing costs. For Bitcoin and crypto, guys, it's basically rocket fuel because you can't cap the yield on hard assets. And guys, we can't really be talking about liquidity without talking about the massive hole in America's balance sheet. The US is running monthly deficits right now of over $300 billion. Tariff revenue only covers about 10% of that. At this pace, we're looking at $2 trillion deficit this year, and projections as high as $2.7 trillion by 2026. As you guys know, that is not sustainable. It's a ticking time bomb. Now add the dollar, which is down almost 10% this year, the worst performance in decades. Historically, when the dollar weakens, capital floods into risk assets. This is when everything pumps. Crypto, stocks, commodities, they all catch a bid. Put those two together, exploding deficits and a collapsing dollar, and the setup for Bitcoin as hard money has never been clear. But clarity doesn't mean timing. The question is, when does that pressure point snap and what breaks with it? So macro tells one story, markets, they tell another. And this is where the debate splits the room. On one side, you got people pointing to froth, leverage, and late cycle signals. On the other, you got voices saying this cycle is different because the entire liquidity machine has changed. Let's take a look at Julian Bittel from Real Vision. And he says it pretty straightforward. Bitcoin is a macro asset. If the business cycle extends, the crypto cycle extends as well. Simple as that. Raoul Pal takes it even deeper. He says liquidity is being engineered. The US Treasury is issuing short-term bills that keep the taps flowing. Debt from COVID era is rolling over, which means constant injections to keep the system alive. That creates a smoother but longer liquidity runway. So we're left with a paradox. Leverage made the market fragile, and today that fragility showed up in a deep red day. But underneath, the Fed and Treasury are still forcing liquidity into the system, which argues for an extended cycle. The bond market may be flashing tighter conditions, but in crypto, it's the liquidity backdrop that ultimately drives the trend. So how am I feeling about the current cycle? Because in traditional 4-year cycles, we would only have about 1-2 months left of a bull market before the whole thing collapses and falls over, right? 1, 2, 3 months. I've been watching a lot of stuff, and what I think that we're going to go into Q2 of next year, and that could be the end of the cycle. But we'll have to see. Data is the most important, and that's why we bring these videos to you 5 days a week, as we're constantly watching how things shift and constantly watching for cracks in the system or for fundamentals to massively shift something into bearish that we want to be looking to take off of the table and be prepared for, the bear market that inevitably will come, whether it's in 1 or 2 months or it's in 6 months from now, maybe a year. We need to watch closely. So guys, what comes next? When the dust settles, leadership matters here, because in crypto, whoever leads defines the cycle. Bitcoin has lagged equities, but it's still positioned to catch up. Ethereum, the signals are mixed. You got option flows that lean bullish, but futures remain unconfirmed. It's like a car revving its engine hard, but still in neutral. And then there's BNB, steady, unbothered, and quietly pushing into price discovery, going through all-time highs, and it's processed $1.9 trillion in DEX volume against a $145 billion market cap. If that were valued like Ethereum, BNB would be trading closer to $1,350 if you were to measure it in that way, right? But that's obviously not the only way that we measure it, but that's just to give you a little bit of perspective on just how popular the BNB chain and ecosystem is. But it also has US regulatory headwinds, which is the biggest market in the world, right? But you've also got regulations that could turn more favorable, and the ripple effects across the ecosystem could be absolutely massive. And then you've got Base, right? That might be the wild card. In August, they pulled in almost $6 million in profit from the chain. And now they're exploring a token. There's lots of talks about this Base token. With sub-second finality and sub-cent transactions already live, a launch of the token could supercharge the flywheel, pulling in users and protocols that are chasing incentives. That kind of reflexive loop is that it drives ecosystem verticals. And then you've got the altcoin market cap, which excludes Bitcoin and Ethereum. It's sitting at 1.14 trillion, right at the range high resistance. You got traders like Damasco who are watching for either a breakout or a clean retest before committing real capital. So guys, leadership is up for grabs. Bitcoin is lagging, Ethereum is hesitating, BNB has unfinished business in the United States, and Base is loading a catalyst. Whoever takes that role will define the next chapter of the cycle. And guys, for me, I honestly don't know. I honestly don't care right now. I'm not going to predict on who's going to take this. The most important thing is to do is watch the data. And that's what we do on this channel. Subscribe if you're not, to make sure that you guys get all this data as it's breaking. And when markets get this stretched, the noise gets louder than the signal. Every influencer, every thread, every new chart, all of it is fighting for your attention. That's exactly when most traders lose the plot. Bob Lucas put it perfectly, guys. He said after 30 years in the game, he finally stopped trying to force short-term trades. His edge came when he leaned into strengths, spotting big trends early, reading sentiment, and staying patient with those things. That's how he started making real money. And that's exactly how I play this market as well. That's the lesson for this moment. Don't chase every candle. Don't try to copy trades from Twitter. Find the setup that matches your own strengths. Position with conviction, and then let the market do the work. Because here's the truth, guys. When the cycle breaks out of its calm, the move will be violent. If you're scrambling to keep up, you'll miss it. If you're positioned, opportunity awaits. And guys, I would just encourage you to not get emotional in this market. There's this drop to $112,000, $110,000 overnight could shake a lot of people out, could make you really start to question where we are in this market. But if you just understand the big picture of the market, why this was caused, and that fundamentally we're still in a better position than we have ever been this year, then hopefully you're not going to get as emotional when these kind of things happen. So guys, here's my takeaway for today. This crash was the reset, whether it becomes the launchpad for Q4 or the beginning of an opening act for something even bigger. The opportunity is forged at the same place, in the bloodbath. If you're waiting for certainty, you might be too late. So guys, I'm not saying that we go in today and buy this dip. I'm saying wait, and I don't think that there's nothing to me that signals we go up only from here. I think that we're going to see some sideways action happening, but that's when you want to start taking positions. Not financial advice, of course. That's for me when I'm going to start looking to make moves. Look at the altcoins that have been in a bloodbath. You got things like Solana that was up from like $155 all the way down to like 120 right now or something. You got Hype that was up at 60, now it's down to 48 or something like that. So these good opportunities on the things that you know are going to do well when altcoin season does come. So I'm not saying to make any moves today. I'm not. I'm going to wait to see if we go lower, if altcoins bleed even more, because that's a possibility, right? We still haven't seen a big 40% pullback in Bitcoin this cycle. That could still happen right now. altcoins could go much lower. So for right now, guys, that's me. I'm just waiting, and I think that we're going to continue to go sideways for a little bit, and we'll look to place bets maybe this week if the opportunity presents itself. That's all for this time, guys. Until next time, remember, stack your Satoshis, stack some ETH, some Solana, some Sui maybe, but mostly Satoshis, because as Ben said in the interview, Ben Cowen, if you guys haven't seen it, make sure you check that out. I'll leave a link. Either I'll put it up here or leave a link in the description below. But October, when we show the seasonality chart, Bitcoin usually leads the October rally, and Bitcoin dominance starts to go back up too. It's not really till November when we see the massive altcoin season that usually comes. All right, guys, I'll catch you in the next one. See ya.